Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Credit downgrade. The dollar and U.S. futures edge lower after Moody's stripped the U.S. government of its top investment grade rating. Diplomatic tightrope. South African President Cyril Ramaphosa will meet Donald Trump this week after months of criticism from the U.S. president. And Gaza escalation. Israeli defense forces say troops have begun extensive ground operations throughout northern and southern Gaza. Well, it has just gone 8 a.m. across the Emirates, 7 a.m. in Qatar. I'm Jumana Versace in Doha. We're going to be here all week. And of course, tomorrow, the Qatar Economic Forum, powered by Bloomberg, kicks off. We have a packed agenda. We're going to be bringing you a lot of content this week. And of course, a really seminal week coming on back of President Trump's whirlwind tour around the GCC last week. So that's obviously going to set the framework for a lot of the discussions, in addition to discussions about some of the major investment themes that people have been focusing on. So speaking of investment themes, let's talk about that U.S. downgrade that came through from Moody's on Friday. We are seeing a notable reaction in some of these markets today, and the reaction has been negative for risky assets. We have U.S. futures leaning towards the red. We have the dollar also slipping after the news came out. 10-year treasuries moving slightly upwards, and what you're seeing there is a steepening of the U.S. yield curve. So the front end of the curve has gone down in terms of where rates are trading, but 10-year, 30-year have started to move higher. So a steepening reaction on back of that downgrade. And then gold actually benefiting. So you are seeing a bit of a flight to quality safe haven bids come through in that part of the financial assets. So this has been the knee-jerk reaction. But switching over, let's also take a look at how some of these Asian markets are faring today as well. We had a string of data come through from China. So they're actually surprising to the upside. The industrial output expanding faster than expected in April, though the retail sales figure came in slightly weaker. But you can see that we are seeing a bit of negativity transpire on some of these indices, the reaction in other indices as well, the Nikkei and the Taiwanese index also leaning towards the red. So risk-off session is the tone that we're getting from Asia and a lot of these markets today. So we are going to continue the conversation with some of the other top themes that we're talking about today. Including some of the highlights from the Qatar Economic Forum. So with that, let's get out to Honor Ant, managing editor also for Middle East and North Africa. Honor, let me just start off with you. We are obviously here at the Qatar Economic Forum in Doha. So much to talk about, a lot of excitement. But maybe let's just start off with the fact that President Trump was in the Gulf region last week. What is that going to do to some of the conversations that we're going to be having here, and also how has it set the tone for what these Gulf countries are trying to achieve?
Good morning, Jumana. Well, President Trump's visit to the region had two highlights, or had two main focal points. One was obviously investments, and the other was the U.S.'s engagement with Iran, or security of the region in general. On the former, President Trump had basically got what he wanted. He scored big wins when it comes to his own domestic audience. The Gulf countries in the region committed more than $3 trillion of investments into the U.S. The numbers are big. The details are kind of scarce, but it almost doesn't matter for Trump. He needed big wins during his first overseas trip in his second term in office, and he got it. On the latter, on the security issue, I think the dynamics are a bit more tricky. We have seen that the U.S. and Iran have been in indirect talks to defuse the nuclear problem, if we can call it that. And President Trump has essentially said that he's going to resolve this issue one way or another. And what it essentially means is that either the talks will work, or, in his own words, something bad will happen in Iran. Again, in terms of the security and the relationship with Iran, I think the key issue last week was the fact that President Trump announced a lifting of sanctions on Syria, which is clearly linked to that country's ability to remove foreign fighters from its soil, effectively blocking the land link between Iran and some non-state actors in the region, such as Hezbollah in Lebanon. That is going to be key to watch going forward, and that is clearly an important issue for the Gulf states, because if diplomats go quiet, something else will happen, and that something else is possibly a military operation, which obviously Middle East Gulf producers wouldn't want to see, given the fact that just a tiny waterway is dividing them from Iran.
Yeah, well, thanks for the geopolitical setup. Obviously, some major breakthroughs on that front last week. But Onur, let's also talk about some of the economic pledges that these Gulf countries have put together last week. Lots of headline numbers flying around, 1 trillion here, 1 trillion there. How much is that? How much of that is going to frame the discussions that we have this week as well, in terms of what exactly these Gulf countries are going to be pledging in terms of actual money that goes into the U.S. versus what's been signed on the ground in terms of tangible deals?
Well, as you said, in Doha, the main theme at the Qatar Economic Forum will be transforming the global economy through the rest of the decade, and by extension, economies in the region. And that visit by Trump makes this a very timely discussion, because the pledges made last week by the three main Gulf oil producers, Saudi Arabia, Qatar, and the United Arab Emirates, have created a new commitment for these states. And this unleashes a new power, pulling their economies in one direction, whereas the existing priorities they have, the domestic priorities, are going to be pulling their economies in the opposite direction. All these three countries have announced very ambitious and costly domestic transformation agendas that are aimed at weaning their economies off oil income. Now, this comes at a time when oil prices are already suppressed and possibly can stay there for a prolonged period of time. How does that affect their ability to live up to their promises made to President Trump last week? Trillions of dollars to be spent on everything from U.S. tech to defense technologies, aviation, and also likely foreign direct investment into the U.S. This is going to be, how this unfolds is going to be extremely tricky, and this is what people in Doha this week will probably discuss.
Onur, looking forward to having you on the ground here as well. Onur Ant, Bloomberg's managing editor for Middle East and North Africa. Thank you so much. Well, South African President Cyril Ramaphosa will be meeting with Donald Trump on Wednesday, despite concerns that Trump may humiliate him, like Ukraine's leader Volodymyr Zelensky. For more, Jennifer Zabazaj, our chief Africa correspondent, joins us now. Great for us to both be in the same place at the same time, Jen. It's really good to have you next to me. So big week coming up for South Africa. The president is making his way over to D.C. as well. Some concerns, as we were just talking about in the read-into, that he may be given the Zelensky treatment the first time he was there. But of course, the relationship between the two has been a bit tricky recently. Yeah. What is Ramaphosa looking to achieve out of this trip?
Yeah, Juman, I think it depends on who you speak to. The interesting thing about this whole scenario is really that it seems to have united the parties, the coalition parties within South Africa. As you know, it's been quite a tumultuous year leading up to this week where the budget is going to be unveiled. But the president is opting to skip the budget pronouncements to this week just to meet with President Trump. But it's seeming like opposition groups are all coming together, wanting to see some unification and really some solidification of this bilateral relationship between the U.S. and South Africa. So we will see a few ministers that will actually be traveling with the president, including John Steenhuisen, who is a member of the opposition party, who has actually come out and said he does not believe that we are going to see a similar confrontation, I guess you can say, to Trump and Zelensky. And potentially this is an opportunity to reset the relationship and really talk about some of these falsehoods that we've heard the White House purporting and talking about for the past few weeks and months, and set the record straight and perhaps a clean slate as we enter into the back half of the year, which is, of course, very important for South Africa as host of the G20.
How has South Africa been able to navigate some of the pressures that have come through from the Trump administration, be it on South African farmers, on trade, on BRICS, on their stance on Russia, even on Israel as well? So how has the response been from the South African government?
Well, if we take a look at President Ramaphosa in particular, it's very fascinating, this line that he's been able to really thread. Just a few weeks ago, he was hosting Volodymyr Zelensky in Pretoria. He's also spoken to both Trump and Vladimir Putin in the same week. So he's very persistent about this non-aligned stance that he believes is his stance, and also the government's stance. They are not backing down on this. And many people also point to the fact that Ramaphosa is a very clear negotiator, similar to what President Trump is. And so they are hoping that this meeting will be an opportunity for both of these sides to be able to really put forward their strengths and make a relationship that is both beneficial for both sides, right? Yeah. And the concern here really is, of course, I mentioned G20, that's happening later this year. There's also this preferential trade access, which is very important for a number of African countries that's expiring at the end of this year. So many people are looking to Ramaphosa to be the one to hopefully reset the slate, especially after weeks of not great press for South Africa. Of course, we saw the refugees going to the U.S. And so potentially it's that opportunity for him.
Yeah, well, one of the images that stuck out to me from the weekend was J.D. Vance shaking Volodymyr Zelensky's hand. So perhaps there is hope that he can turn things around. Exactly. Yeah. Jennifer, thank you so much. That was Jennifer Zawazaja, our chief Africa correspondent. Former U.S. President Joe Biden has been diagnosed with an aggressive form of prostate cancer that has metastasized to the bone. The cancer is characterized by a Gleason score of 9, indicating that it is likely to grow and spread quickly. However, Biden's spokesperson added that the cancer is hormone sensitive and may respond to hormone therapy, and treatment options are being looked into. The cancer news comes as Biden and Democrats have been dogged by revelations in a new book about the former president's declining mental faculties during his time in office and efforts to gloss them over. Still ahead, hear why BNP Paribas remains bearish on the US dollar in the medium term amid a slowing American economy and tariff uncertainties. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Doha this week for the Qatar Economic Forum powered by Bloomberg. The US dollar edged lower after Moody's ratings stripped the US government of its top credit rating, citing a ballooning budget deficit. Joining us now is Parisha Saimbi, the FXLM Strategist at BNP Paribas. Really good to have you with us on the show. Your take on this downgrade that came through from Moody's. The reaction to the USD has been negative. We're slipping about 0.2% weaker. Will this weakness continue, do you think?
So I don't think that there was a significant amount of new information in the ratings downgrade itself. These were reflective of structural and fiscal issues that were quite well known to the market. But I think that said, there are still some longer term implications of this ratings downgrade. Ultimately, if the US were to head towards a US recession down the line, then we could see that a more limited fiscal response from the US government as debt sustainability issues could arise. And ultimately, that could lead to a more prolonged or longer and deeper recession in the US and would ultimately put the pressure on monetary policy to have to respond. I think the second thing is also that if fiscal credibility is being questioned, then monetary policy credibility will be next. And it ultimately puts the pressure on the Fed remaining on hold, we think, through the course of this year in order to remain or maintain that credibility.
So you bring up the topic of credibility. Earlier in the year, people were very excited about this theme of U.S. exceptionalism. Do you think that theme has now been put on pause, or has the market just moved on away from it? Is it a pause? Is it just a temporary pause away?
I don't think it's a temporary pause. We do think that the US economy will slow through the course of this year. Yes, we have had some de-escalation of tariffs between the US and China. We are starting to see some trade deals coming through. We've seen the UK and the US. But ultimately, we're still seeing a sharp rise in tariffs from what was about 2.5% levels to closer to 12% levels, we think, in the kind of longer term, with those 10% baseline tariffs likely to remain over the foreseeable future. And ultimately, that will have a drag on the US economy. But we do think that the US will manage to avoid a recession. So it will be slow growth, but avoid a recession. But nevertheless, we think that will ultimately weigh on the US dollar.
What do you make of the, I would say, disparity between the price action that we've seen in equities, whereby equities have fully erased the losses of the year now in the US, whereas the dollar continues to trade heavy? Are they signaling different things about the state of the US economy?
So I wouldn't say that it's necessarily different things. I think ultimately we have seen a reduction of the tail risks from the de-escalation of tariffs between the US and China. But ultimately I think for the US, there is still going to be heightened uncertainty, or at least higher uncertainty than what we've seen previously. That will ultimately see global investors start to reduce some of their excessive US asset holdings. And ultimately from that profile, we have to look at the large US asset holders, which will be Europe, Japan, and many others within Asia. And ultimately, we think that those capital flows will put pressure on the dollar to weaken, either because of repatriation, an increase in hedge ratios, or corporates perhaps converting their dollar holdings into local currencies.
Yeah, so let me pick you up on that. From your vantage point, sitting in Asia, there have been reports of Asian accounts looking to sell down some of their dollar holdings or just not reinvest. What are going to be the beneficiaries on the back of those types of flows? Which currencies will that money go into?
So we think that the euro will be the biggest beneficiary of this kind of change in capital flows. And that will be due to two reasons, I would say. One is that the euro area is the next biggest financial market. So while we could see some repatriation into Asia markets, ultimately the size of those financial markets are a bit smaller, and many do have mandates to invest abroad. So we could see some rotational flow out of the US and into other European markets then from some of those other global investors. But I think the second reason is also because of the growth picture for the euro area. Yes, tariffs are a negative, but we do think that the fiscal support that has been announced earlier this year will act as a counter to those tariff effects and will ultimately support and drive growth over the medium term for the euro area. So with those prospects, we do see that there will be higher bond yields over the long term, and also could put pressure on European equities to rise over the long term as well.
Yeah. Let me round up with a question about the renminbi, because at the peak of the trade war, I guess in the dark days of April, there was a view out there that the Chinese authorities would allow for a significant weakening of the renminbi, of the yuan, as one way that they could counter the impact of the tariffs. Obviously, since then, there has been some progress, constructive talks between the US and China. What do you think happens to the yuan from here onwards?
So I would say that while there has been progress, China still has much higher tariffs than other countries around the world, and that will weigh on its economy, and ultimately we think will likely require further policy support from the authorities in China to counter that effect. But we think for the FX itself, we do think that the renminbi is likely to remain on a weaker path against a basket of currencies, although it may prove a little bit more stable, or the dollar dynamics might prove to be the more overwhelming majority that puts pressure on dollar renminbi to decline over the course of the next couple of years. But we do see a path for renminbi to weaken against other global currencies.
Parisha Saimbi, FXLM Strategist at BNP Paribas, thank you so much for joining us. Really good to get your insights, especially after that big news that came through on Friday with the Moody's downgrade of U.S. credit rating. Now coming up, Zimbabweans caught off guard after the UK scraps care worker visas. We'll look at what impact this will have on the African nation next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Doha today. The UK government has announced plans to permanently scrap visas for care workers. The move affects Zimbabweans looking to migrate to the country for care work. For more, Bloomberg's Ondiro Ganga joins us now from Kigali, Rwanda. First of all, Ondiro, explain to us why the care visa has grown in popularity in countries like Zimbabwe and Nigeria. What exactly is the care visa?
Hi, Jumana. So a care visa is a visa that allows both medical professionals and also adult social care workers to migrate to the UK legally and get works in fields that they're eligible in. And one of the main drivers of this is just economic issues in this country. Let's take a look at Zimbabwe, for example. It has the biggest informal economy in the world. Their currency very volatile. They just phased out the Zimbabwean dollar that lost 80% of its value to the US dollar. They brought in the ZiG, and barely a year in, the central bank had to devalue it by 43%. 7%. Then you have inflation that is really high in this country and policy uncertainty. Look at Nigeria, on the other hand, large population of 200 million people, majority of that being young people, yet they're contending with things like unemployment. And before President Bola Ahmed Tinubu came into power, inflation was high, the currency was depreciating, and even though these reforms have been able to turn around the economy, it's yet to be felt in the bottom line of these people. And so they're looking for greener pastures abroad. If you look at the composition of care workers, 26% of them are overseas workers. Last year, 19,000 visas were issued to Nigerians, 15,000 issued to Zimbabweans. And these are people that are just trying to seek temporary relief in terms of earning. One, the pound is higher than their local currency, but also they're hoping that eventually they can integrate and transition into roles that are better suited for their technical skills.
Right. So that sort of explains to us why those visas were appealing. But what does the phasing out of the visas actually mean? What are the economic implications for some of these workers?
Jumana, it means uncertainty for those that are holding existing care worker visas. They're uncertain what will happen next. They don't feel welcomed in the UK anymore. And also it takes away the route of migration and also livelihood for those who are hopeful. Even though it pays £25,000, which is minimum wage, it's still better than the earnings that they would have made in their own countries as nurses, as teachers and other fields that they work in before they do the training to go and work in the UK as care visas. And also there are a couple of things that have led to this. This is a problem that the UK is trying to pin on the rest of the world, but they have had their own internal issues that necessitated the need for these social care workers. Go back to 2022, the impact of COVID-19, 160,000 vacancies needed to be filled. In 2023, they issued over 140,000 visas to fill these jobs. And then in 2024, they took a redirection in policy and we saw less than 30,000 visas being issued. And now we are looking at a situation where they're trying to crack down on that number. But the reality is the number of people who will be over 65 years in the UK is bound to rise to about 14.5 million in the year 2040. And so this just necessitates the need to ensure that they build the capacity in their system unless the challenges will continue.
Right. Bloomberg's Ondiro Ganga in Kigali, thank you so much. Well, a quick look at equity futures. Things are leaning towards the reds this morning after Moody's downgrade of the U.S. sovereign credit came through. So a negative start for trading. We'll have more in a moment. But coming up, Israel says troops have begun extensive ground operations throughout northern and southern Gaza. We are live in Jerusalem next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Credit downgrades. The dollar and U.S. futures edge lower after Moody's stripped the U.S. government of its top investment grade rating. Diplomatic tightrope. South African President Cyril Ramaphosa will meet Donald Trump this week after months of criticism from the U.S. president. And Gaza escalation. Israeli defense forces say troops have begun extensive ground operations throughout northern and southern Gaza. It's just gone 8:30 a.m. across the Emirates, 7:30 a.m. here in Qatar. I'm Jumana Versace in Doha. And of course, tomorrow, the Qatar Economic Forum, powered by Bloomberg, kicks off. It is a 3-day affair. We have a jam-packed schedule for you. So going to be bringing you lots of panels and interviews over the course of the next few days. But starting with the main news from the weekend, and that is the fact that Moody's have downgraded the U.S. sovereign rating. It is having an impact on key U.S. assets and has really set the tone negative today. Risk-off environment prevailing. We're seeing U.S. futures tilting towards the reds. As you can see, even though we gained a lot of ground last week, S&P futures down 1% this morning after that news coming through. The dollar also slipping in trade, down about 0.2%. U.S. Treasury yields are moving a little bit higher, as you can see, up about 4 basis points. The curve is steepening. 30-year yields not shown here, but getting closer and closer to that 5% mark again. So remember, that was roughly around the level where back in April we saw a verbal intervention, so to speak, from the Trump administration around those those tariffs and the introduction of the 90-day pause. And then gold, in an environment of uncertainty, people don't know where to put money. Well, it goes into gold. Today, we are up 0.4%. As for Asia, the handover also pretty negative today. And I would say this is despite the fact that some of those numbers coming through from China this morning actually came in better than expectations. So the industrial output figures coming in higher, retail sales lower. But as you can see from here, the handover from key Asian markets down about 0.4% today. The Hang Seng down 0.5%. Heavy selling in Taiwan this morning too, down 1.2%, and the Nikkei down 0.7. Big tech conference taking place in Taiwan. We're going to talk more about that on the show. But let's switch back and talk about the one of the main geopolitical stories in this part of the world from the weekend. Israeli officials say they are poised to order tanks and troops into unconquered parts of the Gaza Strip in an all-out bid to destroy Hamas. This comes as Israel says it would shortly begin to admit what it described as a basic amount of food for the population in order to ensure that a famine crisis does not unfold. Israel imposed a full blockade of food and other aid into Gaza since March the 2nd. Joining us now from Jerusalem is Bloomberg's Dan Williams. Dan, so I'm just going to bring you some of the language that the IDF have used. They've described these ground operations as extensive. They said in a statement that the ground maneuvers were part of Operation Gideon's Chariots, a military offensive they've described as including a potential long-term occupation of the Gaza Strip. Is that what the objective of this ground operation is?
Well, certainly this would be protracted. Gideon's Chariots, as you noted, the name of this operation is designed to be a 3-month full conquest of areas of the Gaza Strip, as yet unconquered in this latest push by Israel. The military now controls around 30% of the Gaza Strip. During that time, the Israelis say they will rout, destroy whatever Hamas elements remain, and by force, be it recovery missions or be it through pressure, forcing Hamas at the last minute to release hostages, recover the remaining 58 hostages. It's worth noting that the IDF also said yesterday they would retain a degree of tactical ambiguity. And the latest reports are that there may have been a rescue attempt in Khan Yunis in southern Gaza, something we're just hearing about in recent minutes. The IDF is not commenting on that. But whether or not that was successful, it would be consistent with what Israel has said is a new expanded operation and potentially an all-out operation, the final push against Hamas in this 19-month war.
What about humanitarian aid and the fact that no aid or food has gone into the Gaza Strip since March the 2nd? There are World Health agencies warning that the population of Gaza is facing severe famine and starvation. What hope is there from that front to bring extra aid into the Strip that clearly is very much needed right now?
Indeed, there's no doubt that this was reaching a major crisis point. The Israelis, for a time, were disputing UN accounts, international accounts of the amount of food remaining in the Gaza Strip. That dispute is now over. As of yesterday evening, the Israelis decided they would admit enough food to bridge the gap between now and around a week from now, when they say an internationally backed distribution system with American companies distributing food and the IDF securing the food distribution areas would finally be in place in the Gaza Strip. So it would appear, and this may cause shortfalls nonetheless for Palestinians who've been suffering from the lack of food over something like 11 weeks now, it would appear that this is on its way to some sort of solution, though the UN has warned that the Israeli plan for distribution may fall short of what is needed in the Gaza Strip, given its size, given war damages, given the distribution of civilians there. The Israelis say they have a plan to divide up the territory, to address civilian needs individually. Time will tell if that can happen. For the time being, a minimum amount of food will be admitted to prevent starvation, the Israelis say, in the final days before that system, that long-term system, can be in place.
Yeah, and even President Trump in his trip last week did mention the fact that, quote, a lot of people are starving in Gaza. Bloomberg's Dan Williams in Jerusalem. Thank you so much. Iran's president says his country won't abandon its pursuit of civilian nuclear energy under any circumstances. Masoud Pezeshkian reiterated Tehran has no intention of developing nuclear weapons. His comments come as the rhetoric between Iranian and U.S. officials intensifies, with Iran's Supreme Leader Ayatollah Ali Khamenei branding President Donald Trump a liar and accused him of power abuse. Joining us now is Neil Quilliam, Associate Fellow at the Middle East and North Africa Program at Chatham House. So many things to pick up on here. I actually do want to start out with the latest ground operations that Israel are conducting in the Gaza Strip. From your perspective, do you think that there is still hope of a diplomatic solution?
I mean, talks are still taking place in Doha. And there does seem to be some movement. I mean, we've seen a number of announcements by Hamas officials to say, there are proposals on the table to, release a number of hostages for a sort of a 60-day drawback from Israel and, the intensification of humanitarian aid into the Strip. So certainly there's some prospect there. But I guess the messaging from the Netanyahu government is, this is full scale. This is a 3-month operation. But I think there is some room for optimism.
A lot was made of the fact that President Trump did not pass by Israel during the trip to the Gulf last week. Some people are calling it a snub. Others are saying that it suggests a deepening rift between the president and the Israeli prime minister. What do you make of that decision?
I mean, I'm not sure that it's a snub. I mean, this really was, a visit to the Gulf, and it sort of echoes, his first foreign visit during his first presidency. But, so much was made of that visit, that 3-day visit to the 3 states. So many deals were struck, so many MOUs were signed. It does look like Netanyahu was sidelined. So I wouldn't see it as a snub, but I do think there was a sidelining there. And the introduction or the announcement that the lifting of sanctions on Syria was there, the meeting between al-Shara and Trump does give some kind of indication that I think Israel is probably on Trump's bad side at the moment. His interest, his focus, much more on the transactional relationships that he's building with the Gulf. And I think Netanyahu's just too difficult to deal with.
An Israeli news channel reported over the weekend that secret talks were taking place between Syrian officials and Israeli officials in Kazakhstan about the potential normalization. Obviously, this is another news agency that's talking about that. But I do wonder if President Trump may be looking to decouple normalization of other countries in the region with Israel away from the events in Gaza. Do you think that this is what they're trying to achieve?
Yeah, no, absolutely. I mean, I see normalization is on life support, if not dead, in the region at the moment. I see a strong decoupling of those two things. And again, I mean, there was very little talk of normalization. I mean, Trump did make reference to it during his speech, but the room fell absolutely silent. I mean, Saudi Arabia has made it very, very clear what its terms for normalization would be, and it just seems to me preposterous to think that Syria would be seriously entertaining normalization. And again, the fact that MBS, Mohammed bin Salman, the Saudi Crown Prince, sort of facilitated that meeting between al-Shara and Trump gives a clear indication where Saudi Arabia sits in this frame. And that is, we are fully backing, we are fully supportive of Syria, fully backing of al-Shara. And, Israel must stop its operations, its military operations, its continued occupation of Syrian lands. So I think normalization is way off the table.
Okay, let me ask you about U.S.-Iran nuclear discussions. The language coming out of Trump has been pretty constructive. Last week he said they were close to a deal. Do you think we are going to get a deal in the coming months between the U.S. and Iran?
I mean, there are mixed messages. The Iranian foreign minister said as such on Saturday. I mean, it's really not very clear, and we've seen sort of Trump, use kind of smoke and mirrors at times. He, clearly sort of stretches the truth. I mean, I would find it very difficult to think that we could reach, a far-reaching deal, something better than the JCPOA within a few months. We've had 4 rounds of talks at the moment. We're waiting for the 5th round of talks. They've gone to a technical level, but I mean, the Trump administration, his interlocutors aren't technical people, whereas the Iranians are. So I think there's a long way to go before any real deal can be reached. But we might hear some positive music from the U.S. president. But at the same time, he still sort of gives that kind of 2-month deadline, saying, if significant progress isn't made, then we're gonna hit, or maximum pressure will be increased on Iran. So it's hard to read between the lines on this one.
Mm-hmm. Yeah, certainly feels like we're heading into a crucial period over the next couple of months on that front. Neil Quilliam, thank you so much for joining our show today. Chatham House Associate Fellow at the Middle East and North Africa Program. Thank you. Well, coming up, Vladimir Putin believes he has a strong hand ahead of a phone call with President Trump today. That story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Doha. A source tells Bloomberg that Vladimir Putin believes he has a strong hand ahead of a phone call today with President Trump. This comes as Washington is pressing for a quick end to Russia's war in Ukraine. Joining me now is Bloomberg's Russia economy and government editor Greg Sullivan. I would say the operative word here is quick, and the fact that the Trump administration does want to see a quick end. But does that set the foundation for an enduring and just peace? Is that what we can expect out of this call?
Well, you're right. The Trump administration is seeking a quick ceasefire to come from this call. Trump said so himself on social media. It's been clear he's been pushing for a halt to the fighting for quite a while now. But out of this phone call, it's very unlikely that we'll see a major breakthrough. You'll remember that on Friday there were direct talks between the Ukrainian and Russian side. They were low-level talks, and while they did produce a 1,000 prisoner swap, they did not lead to a ceasefire. And in fact, over the weekend, we saw Russia launch one of its largest drone attacks since the start of the war. So clearly, there's still a lot of fighting happening, and the two sides remain very far apart on key demands. So a major breakthrough is probably unlikely coming out of today's talks.
Yeah, and of course, we have to draw the distinction between a solution, a long-term solution, and a short-term ceasefire. That 30-day ceasefire proposal is one that President Zelensky had signed up for. How likely is it that Russia agree to a ceasefire?
Well, at the current moment, Russia has resisted any kind of agreement on a ceasefire. As I just said, they had launched a drone barrage against Ukraine over the weekend. Putin has continued to make maximalist demands of Ukraine, demands that would be very, very hard for Ukraine to accept. He's very confident in his position. He believes that he is winning on the battlefield and that he can make a major breakthrough on the battlefield, despite Western assessments and, from what we've seen so far, very slow, costly gains that Russia has made. But he remains confident. He's unmoved by the threat of sanctions, and so he's probably unlikely to back down from his current stance. That being said, he doesn't want to lose Trump on his side. So far, Trump has made proposals that have been very favorable towards Russia and less so towards Ukraine, and he's probably unlikely to want to see a breakdown in talks, a complete breakdown, or to lose Trump. So he's going to try and thread that needle, but at the same time, probably unlikely that he'll agree to a ceasefire, but these talks will definitely be closely watched to see if one does come out of this.
Yeah. What about the status of the U.S.-Ukraine relationship? I thought it was interesting to note, and I wasn't the only person who observed this, but the Ukrainian president was shaking the hand of J.D. Vance this weekend in Italy. Does that tell us that perhaps a rapprochement has taken place, not just between the president and President Zelensky, but also between his vice president and Zelensky?
Well, it's been a very back and forth relationship with the U.S. since the Trump administration came on. That is for sure. Zelensky is in a very difficult position. Before Trump took office, the U.S. was their largest military backer, and U.S. support is crucial for Ukraine's military engagement. However, he's had a very rocky relationship with President Trump. Obviously, Vance and Trump came into office saying that they needed to curtail support to Ukraine, that they don't believe that it's their war to support or fight. And yet, here's Zelensky doing a full diplomatic push to try to keep the U.S. on his side. And that includes, at times, trying to the diplomatic blitz with people like Vance, who has been very critical of Zelensky. So a lot of diplomatic effort there on the part of Zelensky.
Bloomberg's Greg Sullivan, thank you so much for the reporting today. Well, coming up, Nvidia CEO Jensen Huang kicks off Computex in Taiwan, Asia's biggest electronics forum. We are live at the event with the latest on what he's been saying. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersacci in Doha today. Nvidia CEO Jensen Huang has kicked off Computex in Taiwan, Asia's biggest electronics forum. And our colleague Annabelle Drulers has been there covering all of the events, and she joins us live right now. Annabelle, we were just listening to Jensen Huang on stage. Talk us through some of the highlights of his speech.
Yeah, he's been there for 90 minutes. The event has just wrapped, and I think you can see behind me there's a big gathering going on right now. This is people that are here to hear from the Taipei mayor. He's going to be speaking as well to the press in just a few minutes from now. But this speech really outlined not just the key role that Nvidia plays in the chip ecosystem, but as well the key role that Taiwan plays in that as well. And to that end, Nvidia has just announced that they're going to be setting up a new office in Taipei. So we can expect perhaps some more details on that in just a moment. In terms of what we got for product updates, certainly the update to the GB300 was a key focus. That builds on the Grace Blackwell system already in place, but the GB300 updates to that expected in the third quarter of this year. And also Nvidia outlining its vision to start to work with more of the players in the ecosystem as well. On the US side, they're saying that they're going to be offering a new version of complete computers that it provides to data center owners, but essentially opening up AI servers to chips from other companies that are trying to as well build their own. So expanding that ecosystem, even though Nvidia's role, of course, remains at the center of it.
Yeah, very much the man of the hour. And Belle, you had the opportunity to actually speak to him before the event. What did he tell you?
Yeah, well, Jensen Mania really was sort of the key theme of 2024. This time around, it's no different. Jensen Huang is very much a local celebrity here. We spent the weekend following him around, and one of the key questions he wanted to ask him related actually to the Middle East, because he was there with the President Trump contingency last week. There were these big multi-billion deals that were unveiled. Big question, of course, if you're sending chips, if you're sending AI accelerators to Saudi Arabia, to the UAE, is there a risk that any of that technology ends up in the hands of China? Well, I asked him about that diversion risk. Take a listen.
Governments understand that diversion is not allowed, and there's no evidence of any AI chip diversion. Now, recognize our data center GPUs are massive. These are massive systems. The Grace Blackwell system is nearly 2 tons, and so you're not going to be putting that in your pocket or your backpack anytime soon. And so these systems are fairly easy to keep track of. But the important thing is that the countries and the companies that we sell to recognize that diversion is not allowed, and everybody would like to continue to buy Nvidia technology, and so they're very well. They monitor themselves very carefully, and they're quite careful about that.
So again, really downplaying any risks of diversion, but it is certainly a key concern that we're hearing from sources that are within the Trump administration, that it needs to go beyond sort of high-level language in these accords to have really concrete terms in place that prevents this technology from making its way to China.
Yeah, and a big question that was raised last week after all those deals were inked with Middle East. Interesting to hear Jensen Huang saying that it's actually very difficult to divert a lot of that technology. Very quickly, what is next for China? He also spoke about that after the H20 chip was banned there.
Yeah, that's right. So the H20 chip, to just give some perspective on that, this is from a series that has essentially been designed specifically for the mainland market, rather. Now, I spoke to him about that. What exactly is next after the H20 was essentially banned or can no longer be sent to mainland China? He said it's not going to come from the Hopper series. There's no further modifications that can be done. Big question as well. I mean, China is a market that has made up or has been making up around 20% of Nvidia's revenue. They've already flagged a $5.5 billion write-down for the current quarter based on this new restriction that's come into effect. So the question here again is exactly how they do that. Are they losing their edge as well to Huawei within China?
Yeah. Bloomberg's Annabelle Jewelers live at Computex in Taipei. Thank you so much. Well, before we end, I just want to mark a new point that 30-year yields have reached at 5%. This is the first time we've been back to that level since April. And there you've got the Treasury curve in front of you. We are seeing the front end rally a little bit, but the rest of the curve is steepening. 10-year yields up 4 basis points. 30-year yields just shy of that 5% mark now, up 5 basis points. Steepening, of course, after the Moody's downgrade came through on Friday. That was it for our show. I'm Joanna Versace in Doha. Stay with us for Daybreak Europe.